Good day, grade 11s. Today I am going to be going through task 10.15 and 10.16 corrections. The memo for 10.11 and 10.14 will be sent as an attachment. Please mark your work, grade 11s, and remember to always send me your work via WhatsApp or email. Remember, we are taking note of all the submissions. So make sure, especially in this time of you guys not being at school for 14 days, to send me your work, as I will be communicating with your phase head, Mrs. Opperman, making sure that you are in contact with me all the time with regards to your accounting work. So let's get this going. So you were required to prepare a debtors collection schedule, and then you needed to draw up the budget for Maggie's for the period the 1st of January to the 28th of February 20.8. Then they also gave us opening balances. Accrued expenses, meaning expenses that we must still pay. It's still outstanding. So you need to take it into account the next month. It's outstanding. Then rent was prepaid, meaning you won't have to pay for the next month. So if the rent was paid in December, in January we won't have no rent. Then they told us that we had a positive bank balance of 13,900 Rand. So let's go through this work. They've given us our actual and budgeted information. So this is what actually happened in October, November, and December. And this is the budget period. What they expect may happen. The inflows and the outflows of cash. Additional information, a discount of 5% will be allowed to debtors who pay their accounts in the month following the sale. What does this mean, grade 11s? If I have taken or sold goods on credit in January, that means the month following the sale will be February, the next month. All right. Then number 2, it is expected that debtors will settle their accounts as follows. 50% in the month following the sale. So example, I had made the credit sale in January. When will I be expecting 50% of them to be paying me? In the month following the sale, that is February, 1 month after. And that goes with the 5% discount that we have at number 1. They say that 30% in the second month following the sale will pay us money. So if I've taken in January, 2 months later, I will expect 30% of my credit sale payment. So January, February is 1 month. March would be the second month after the sale. 1, 2. 15% will pay in the third month, which means 15% will pay me in April. Okay, then the next, they say that the 5% is treated as irrecoverable. What does this mean? It's bad debts. Do I take bad debts into account in my cash budget? No, grade 11s, we do not. Number 3 says suppliers allow 30 days credit. So remember, suppliers is businesses that we purchase goods on credit from. And what does this mean? We will pay our creditors 30 days later. What is 30 days later? It's equivalent to a month. So if I've taken credit, bought goods on credit in January, 30 days later, I will make payment in February. Okay. General expenses and rent are normally paid in the month in which they occur. This was not the case at the end of December. So if we go right back up to information A, balances of December, remember we had general expenses, meaning it was still outstanding. We never paid our general expenses in December. and our rent was prepaid, usually we basically doubled our payment. We paid for December and for January, meaning you will not take that into account for your January payments. Moving along, Maggie has an overdraft facility with their bank. Remember, an overdraft facility is a negotiation between the bank and the business, that if it is that our incomes are more than, while our expenses are more than our incomes, that we will go into an overdraft, basically a loaned amount by the bank, and they will obviously charge us interest on that. 6, a loan of 20,000 will be negotiated with the finance company. The proceeds will be received in February. Loan repayments with interest will commence in March. Is March our budget period? No, it is not, okay? So basically, you're only taking the loan into account. So I'm going to go through these corrections after discussing this with you. Firstly, we're going to discuss the total debtors collection schedule. What did we do? They said, remember, here's our sales, cash sales, credit sales, and these two together will equal our total sales. And in brackets, we have 30% of our total sales will be on credit. So if you work out so 12,300 plus 5,400 will give us 17,700. And then if we say 15,500 plus our credit sale of 6,480, our total sales is 21,980. All right. Now you can see from December they give us the total sales, and now we need to work out respectively the 30% credit and the 70% difference will be cash. So let's work out our credit sales. It was the 40,000 times the 30% on credit. 12,000 Rand will be my credit sale. Okay. And then the 70% will be our cash, which is 28,000. And that's our cash sales. You'll do the very same for January and the very same for February. Okay. Moving along. We will now take this information that we've just worked out over here and take it to our debtors collection schedule. We filled in the blanks. Okay. Remember, the total sales for January is 10,000 and for February it was 12,000. They told us that. What did we do? We worked out 30% of our credit sales and 70% of our cash sales by using the total sales. Now, what are we going to do, grade 11? We are going to look at our debtor expectations of how they will pay the accounts. 50% will pay in the month following the sale. Okay, October, we made a credit sale in October. They didn't say anything about payment being made in October, but they did say 50% will pay in the month following the sale. So the month following the sale from October will obviously be November. 2 months later, how much will pay us? 30% will pay us 2 months after the sale, which leaves 15% will be paying us 3 months after the sale. So now remember, grade 11s, the sale happened in October. 50% pays me 1 month later, not forgetting the 5% discount we give them. If they had missed that bus, then 30% will pay us 2 months after the October sale. So 1, 2, remember. If they miss the 30% bus, then in the third month, 15% will pay us. Okay, so with that being said, you can see that the calculation or the percentage that we're going to calculate our credit sales by is placed right next to the October month. And I just want to draw to your attention again. What am I taking into account when working out my debtors collection schedule? I'm taking my credit sales into account. I'm not interested in the cash. I want to know how much of my credit sales will I be receiving in cash in the budgeted period. Okay, moving along, November. So what happened in November? In November, our credit sales was 6,480. Remember our debtors collection schedule. They say that obviously you'll make the credit sale, but 50% minus the 5% discount will pay you 1 month later, 1 month following the sale. 30% will pay you 2 months following the sale, and 15% will pay you 3 months following the sale. So there's our first month, second month, third month. So remember, month number 2 and month number 3 falls in your financial period. So you're going to take the 6,480 Rand credit sales and you're going to multiply it by 30% in order to get the 810 Rand figure. And then 3 months later, 15% is expected to pay. You're taking that credit sale again and you're multiplying it by 15% to get how much you will be receiving in February from the November credit sales. Perfect. Let's move on. In December, what happens in December? So here's December. We had credit sales in December worth 12,000 Rand. Remember, your debtors collection period says that in the month following the sale, so 1 month later, our debtors are expected to pay 50% and we give them a 5% discount. So remember our credit sales was 12,000. So 12,000 times 50% is 6,000. I then work out the 5% discount and I will subtract the 300 from my 6,000, which means 5,700 will be paying me in January. All right, grade 11s. And then 2 months after the sale, how much is expected to pay me? 30%. 12,000 times 30% will give us 3,600 Rand. Moving along, we are now going to the January credit sales. Remember, this is when the credit sale has taken place. How is our debtors expected to pay us? 50% will pay us 1 month after the sale. And remember your 5% discount. So I'm going to take 3,000 multiplied by 50%, which will give me 1,500 Rand. And then I'll subtract the 5% discount and your answer should come to 1,425 Rand. All right. What are you going to do next, grade 11s? You're going to tally up your monthly columns. So in January, our budgeted period for January, this is the amounts we're going to be receiving from our debtors and the total amount should give you 8,454. We'll do the very same for February. How much are we receiving from our debtors in Feb? 5,997. All right. So moving along, we are now going to our cash budget. Cash budget is only interested in cash. It's not interested in anything but cash. No credit sales that took place, but yes, we are taking the amount of money, the cash receipts that we are receiving from our debtors. That is actual cash exchanges that is going to be expected in January and February. Perfect. So let's move on. So they say cash sales, the receipts, 7,000 Rand for January. How did I know that? I took my total sales and I worked out what was 70% of the cash sales. And there's, voila, my 7,000. The very same for February, it was 8,400. Cash receipts from our debtors that we are expecting. There's our amounts and we're just taking it over to the correct month in the budgeted period. A loan. This means that a bank institution has given us or granted us a loan. And obviously a loan is a liability to the business. However, when the bank pays out the loan, it is money that is being received by the bank account. So here's the loan at number 6. A loan of 20,000 will be negotiated with the finance company. The proceeds will be received when? In February. So how much are we receiving from our loan in February? There's our 20,000. Ladies and gentlemen, that is all our receipts for the budgeted period. So you're going to add up your January month, which will give you a total of 15,454, and you will add up your February month, which will give you a total of 34,397. Moving along onto your payments. Cash payments to creditors. Remember, who is a creditor, grade 11s? A creditor is someone or a supplier that the business owes money to. How did we get to owing them money? We have purchased or bought goods / trading stock on credit. All right, we bought it now and we paid later. All right, so let's go and see what was the information that they said about our payments to our creditors. Point number 3, it said suppliers allow 30 days credit. So if I purchase credit in January, I will pay that amount in February. All right, so let's go and see. Stock purchases. Remember, this is your cost of sales amount. Your cost of sales amount can consist of cash and credit. But in bracket, they say that we purchase stock. Our stock is all on credit. So all these amounts have been taken on credit. And what does this term mean at the sentence mean at number 3? Suppliers allow 30 days credit. So if I've taken the 17,500 Rand in October, I will pay it in the month of November. If I purchase 16,200 Rands worth of goods in November, I will pay it in December. If I purchase 21,000 Rands worth of goods in December, when will I pay it, grade 11s? In January. And the very same with the 8,500 credit purchase, I will pay it 30 days later, which will be in February. So what amounts am I taking? What is my payments to creditors in the month of January? The 21,000. Because why? You are paying it 30 days later. The January credit purchases was 8,500. I'm going to be paying it in February. That is why I have the 8,500 Rand over there. Moving along, they didn't say anything about salaries, but remember, salaries is a monthly payment to who? Your employees that work for you. And as you can see, in October it was 6,000, November it was 6,000, December it was 6,000, and clearly they have increased their salaries by 600 Rand. So in January and February, we are expected to pay salaries worth 6,600. And there you have it. Rent expense, here we go. Remember that we have prepaid our rent. So we are not going to be paying rent in the month of January, but we will be paying rent in the month of February. So how much was our rent in Feb? 2,875. As you can see, we've prepaid, so I'm not going to be paying for the month of Jan, but I will be making the payment in February. General expenses, you had 1,300 that was still outstanding, but as you can see for the budgeted period, your general expenses was worth 1,990. You adding what was still payable, your accrued expenses, the 1,300, and if you add that up, you should get general expenses worth 3,290. Your general expenses for the February month is 2,770, and we've placed it over there, grade 11s. What are you going to do now? You're going to tally up your total payments for January and it comes to the total of 30,890, and you'll do the very same for February, which is 20,745. How do I get my cash surplus or a shortfall, you may ask? I'm taking my total receipts A and I'm subtracting my total payments B, which will give me either a cash surplus or a cash shortfall. As you can see, our total payments is more than our total receipts in the month of January, and that is why I have a shortfall. Where did I get my bank opening balance? They told me right here, opening balances in the general ledger is 13,900. I placed that 13,900 there. Negative shortfall, well, 15,436. We adding our opening bank balance of 13,900, which gives me an overdraft of 1,536. Remember, they said this business has a overdraft facility. Remember, your bank closing balance will then be your opening balance for the next month. All right. How do I get the cash surplus or shortfall? I'm taking A and I'm subtracting B, which will give me a cash surplus of 13,652. Subtracting my opening bank balance, and I get a bank closing balance worth 12,116.